What are the key company highlights this quarter?
Well, thank you. I believe strongly that one of the most important things we can do on behalf of our clients is continue to invest in our team, grow our team, and attract great talent to our organization. And this last quarter, Anna Premislova joined our client portfolio management team, and we're excited to have her on board with C2B McLean & Partners, and she'll be working very closely with Russ Mackay on our client portfolio management team. So Anna, welcome. And why don't you tell us a little bit more about yourself?
Yeah, thanks, Kevin. Well, I've been calling Calgary home for about 4 years now, and it's starting to feel more and more like that every day. I'm a transplant from Ontario. I graduated from Queen's University and initially came out to Alberta with the oil and gas industry, working in corporate finance. And at that point, I was already pursuing my CFA, so I was starting to get a taste for the more personal, immediate impacts you could make through private wealth management. And of course, C2B McLean Partners reputation really precedes you. And so I always knew that this team was the gold standard of client care in the city, and I'm thrilled to join you.
Super good. So you've come from Ontario to Alberta. We've got some mountains and outdoors, and tell us what you like to do for fun.
You know what, I always considered myself an outdoorsy person, so I was excited to move here. I knew that the hiking here was world class. And so I got here and I threw on my jeans and my slide-on sneakers and decided to climb a mountain. And I got about a third of the way up my first one before I realized, hey, there's not a whole lot of air up here.
Nope.
It's gotten better since.
Good. And I hope you got some hiking boots too.
Yep, I did.
Okay, excellent. So super, Anna, thank you very much and welcome to the team.
Thank you.
Are there any other updates that you would like to share?
Yeah, it's actually been a busy quarter on the renovation front. First off, we renovated our website. So you may have noticed that we've changed the look, the colors, and the navigation. So we continue to kind of invest in technology and improve what we're doing for our clients. So for those of you that haven't had a chance, I encourage you to check out the new website. And secondly, staying with the theme of renovations, we've actually been renovating our office and improving things in the office, and that's been coming along quite well. We've been in this location about 18 years, and we constantly get feedback from clients how much they love our location, how easy it is to get to, and how accessible the parking is. So we're excited that we're going to be staying in this location for at least another 10 years, and we're making our way through this renovation.
Markets are at all-time highs. What is going on?
Yeah, it's strange that, just by looking at the markets, it seems sort of unreal that some of these markets are at all-time highs. We obviously have the S&P 500, we have the TSX, Brazil, India at all-time highs, and yet there isn't that euphoric feel that usually accompanies this type of move. And I think it's because there's still a lot of fear in the market. There's still people who don't believe, in this rally. So when we look at some indicators that tell us that, for example, the chart you're seeing in front of you, which is the amount of negative yielding bonds in the world, up until a couple of months ago, there was still $17 trillion worth of negative yielding bonds. Today, there's 12 trillion, but that's still elevated. So it says to us that the participation is still not there, and there's not quite that euphoric, high-fiving, if you will, with some of these markets at all-time highs.
What has the research team been focused on in this environment?
So when we look at these, macro uncertainties, we have an acronym that we use, which is macro uncertainty, micro opportunity, or MUMO for short. And what this allows us to do is really look through and cut through the noise, using our process and philosophy to uncover stocks that we believe will outperform over a long term. But last year we had an environment of despair, where no one believed that we would ever see a recovery. This year we've had some recovery, but the recovery has been spotty at best. This discrepancy or this dichotomy allows us to take advantage of those stocks that haven't participated, but we see value in these names or in these stocks. In the following presentation, we will provide some examples, some specific stock examples of companies that have defied some of the macro and have also taken advantage of the opportunities that's presented to them.
What opportunity have you found through the uncertain macro environment?
For instance, the company we highlighted in this quarter, Howdens, it stood out to us on valuation, balance sheet, return, and growth metrics. However, when uncertainty is high, the first instinct is to stay away from businesses like Howdens that is classified as an industrial business, which exhibit high cyclicality. However, our process requires us to look behind the numbers and understand what's really going on. And what we found was that Howden was able to put up pretty good numbers through different parts of the cycle, and that really caught our interest. At a very basic level, Howdens is a kitchen supplier. However, what distinguishes Howdens from its peers is the fact that its core customer is really just the tradesman or the kitchen contractor or builder. It does not directly serve the retail market.
Can you tell us how Howdens has defied tough conditions in the UK?
While Howdens' product quality is good, the service level is as important. And in fact, the company goes on to state its core purpose as making life as easy for these builders as possible. And it does that through extending credit, inventory availability, convenient locations, and excellent consulting advice. What Howdens has been able to do by providing this exceptional service is build an indirect sales force with its customers, the contractors. These contractors are loyal to the Howden brand, and they basically recommend this product to retail customers like you and I when they go to renovate their kitchens. This allows Howdens to continue increasing their commanding market share within this segment despite the macroeconomic conditions. And that is what allows Howden to continue increasing its earnings per share despite of the environment.
Which of your holdings is in an economically sensitive sector?
Typically, when people are fearful of recessions, banks usually don't do well. And reasons being lower rates lead to lower income for banks, all else equal. And second, people are worried about them recovering their loans. What if somebody defaulted and banks have losses? And in that respect, what the market has done now is they've painted almost every bank with the same brush. As a result, one of our holdings, Bank of Ozark, now they're called Bank OZK. So Bank of Ozark is painted with the same brush. They are trading really at nonsensical valuations today. What we like about the bank is that they are one of the premier banks in the construction lending sector. So their loan duration is really short, comparatively shorter than the other banks. And second, they are one of the better underwriters than when compared to all the other banks in the US. And what I mean by that, on an average, Bank of Ozark has had loan losses compared to other banks which are to the tune of 60% lower. So their balance sheet is very sane right now, and we believe in a recessionary environment they'll withstand much better than the other banks.
How would Bank OZK perform in a recession?
We expect bank to perform much better because of how they underwrite their loans and their balance sheet strength. Morgan Stanley actually did some interesting work around testing various banks' balance sheet in a recessionary scenario. So they emulated 2001 and 2002 scenario, as well as the financial meltdown in 2009 and 10. And what they found out is that Ozark, in those kind of environments, their balance sheet would do much better than their peers. So we expect that to continue, and we would expect that Ozark would be able to take advantage of that environment and emerge as a better business.
What portfolio changes have you made within the Canadian transportation sector?
Over the last 2 months, we reduced our weight in the Canadian rails and almost doubled our weight in TFI International, one of Canada's largest trucking companies that has operations both the US and Canada. Most will probably be familiar with this company through their most two visible brands, Canpar and Loomis Express, which was once DHL Canada. The reason why we did this is because over the last couple of months we noticed a trend that the Canadian rails reported relatively good volume growth, while the trucking industry, mostly in the US, reported sharp volume declines and sharp price declines as well. CN is very exposed to the US market, and therefore we were concerned that they will face some pricing pressures. As a result, we reduced our weight in CN and increased our weight in TFI due to that concern.
Do you think trucking is still a good investment in the current environment?
Yes, I do. When judging whether trucking is a good investment or not, we have to look at a variety of factors. First is what is the valuation that we're buying TFI International at? Second, what is the macro environment that TFI is currently operating under? Over the last couple of months, especially since the trade war between the US and China began, volumes of trucking declined sharply and prices declined sharply as well. However, currently there are some signs that the US and China may be able to resolve the difference between them in terms of trade, and if they do, volumes of trucking is expected to increase, and we already see some stabilization in terms of trucking rates. As a result of the valuation of TFI, we believe that there is a good rationale for investing in TFI International today.
How are you positioning fixed income investments in a negative yield environment?
A good example of how we have reallocated within our corporate bond portfolio to having a 10% weight in US dollar denominated corporate bonds. These are not US based companies per se, but these are companies, global companies that issue in US dollars. So we have gone from about 2 or 3% weighting in that type of asset to about a 10% weighting. That equates to about $30 million worth of now these US dollar bonds. And as I said, with AerCap being an example of that, we're finding great value with these companies who are coming to market in the US with some quite attractive yields. The AerCap example is, provides a coupon of 5.875%, which is a very, very high coupon, and now trading at 104. So you get the combination of, higher income plus that capital gain component. But you have to do your homework, and you have to be prepared to be able to take advantage of these opportunities.